is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Welcome to this week's episode of DeFi Decoded. My name is Andrew Young, and I'm here with my co-host Alex Tapscott. And this week we're going to be talking about Decentralized Autonomous Organizations, better known as DAOs. So while decentralized finance has the potential to completely revolutionize the financial system, DAOs threaten to disrupt the very way that humans organize, socialize, and coordinate economically. So what are DAOs? DAOs are essentially these on-chain entities that facilitate the governance and coordination of decentralized protocols, namely DeFi and increasingly NFT protocols. The typical way that these DeFi protocols work is that they collect a fee, which is then diverted to an on-chain treasury. However, rather than having the core founders control the treasury, in the spirit of decentralization, these DeFi protocols have a DAO manage it. And so what is a DAO? A DAO is essentially allows token holders to vote on how to disperse funds, allocate budgets, fire and hire contributors. It's kind of like a on-chain legal entity in a way. So DAOs are increasingly governing larger and larger DeFi protocols and their respective treasuries. There's no real hard estimate on how large DAOs are, but it's for sure in the billions of dollars now. So on this episode of DeFi Decoded, myself and Alex will be digging into the rapidly emerging DAO boom and discuss how DAOs have accelerated DeFi ecosystem growth. So thanks, Alex, for being on the show with me. How do you think about DAOs as it both relates to the general crypto sphere and as well with DeFi?
DAOs are a concept that I think have taken the world by storm recently, but they're not new. Actually, DAOs were a concept developed many years ago as people were considering how blockchains could move beyond just moving and storing value peer-to-peer to how they could be used to organize capability and build applications. So I think the Ethereum ecosystem, the early founders there were largely responsible for helping to kickstart this boom. My interest in DAOs is long-standing and actually dates back till at least 2015 when we were writing Blockchain Revolution. In that book, we looked at the impact that technology has had on how we organize capability in an economy. So for most of the modern era, corporations have been the dominant sort of entity that are used to coordinate value and to create value in the economy. And we looked at the work of a specific economist named Ronald Coase, who actually won a Nobel Prize in economics because he tried to understand, well, why do corporations exist, right? If the best way according to classic economics is to coordinate value and to transact is in an open market, then why do we have these things called companies? And his basic thesis was transaction costs. It's cheaper to do things inside of a company than in an open market. And so companies grew and grew as the economy developed. The internet changed this a little bit. It changed the cost of moving and storing information. It made offshoring and outsourcing easier because we had communication tools and so forth. But it didn't actually attack the big costs that keep businesses kind of bound together. And that's the cost of contracting, the cost of moving and storing value, and the cost of establishing trust. So what we thought about in the book was, well, what does the economy look like if the cost of doing that, of contracting, of moving and storing value and establishing trust, kind of went to zero, in the same way that the cost of moving information went to zero with the information age, right? And we thought, well, it would lead to some different kinds of organizations. Now, I'm not sure the word DAO had entered the lexicon at the time, but the idea was that you could have a more open, more decentralized, and certainly less hierarchical kind of organization where decision-making could be vested in the participants in the network rather than in the hands of management specifically, right? And this was sort of an experimental idea at the time. Consensus Systems, I think, was trying to model itself in a decentralized way, but it wasn't itself a DAO, obviously, and still is not. And then in 2016, right when the book came out, the DAO launched, which I remember at the time we were watching like the website for the DAO and how much money that they raised. And we knew all the founders of this thing. And it was like, they thought they were going to get to like $5 million. And it was ticking higher and higher to the point where $160 million had been put into this DAO. I think that DAO was supposed to, take that money and then allocate it inside of the Ethereum ecosystem to its best possible use case. That thing didn't end up working out for reasons that aren't really central to DAOs themselves, but it did sort of set the stage for what we're seeing here today. And I think I'm frankly surprised. The more research you do and you look at how a lot of these DeFi protocols are organized and how the treasury is handled and how decision-making is divested from, founding teams in a lot of cases, not always, but sometimes, just how far things have gone. The value of DAOs is, depending on how you define it, in the tens of billions of dollars, which is extraordinary. I just think if it can work for Uniswap, could it work for, NASDAQ, or could it work for any other sort of, traditional artifact of the industrial age, a corporation? Could we decentralize and automate corporations using a similar kind of format? Now that's sort of my sort of high level conceptual way of looking at it. Practically speaking, Andrew, you're interacting with these things all the time. What's your experience been?
Yeah, so the DAOs are an increasingly interesting and vital part of the DeFi ecosystem. And they've really emerged over the last 12 months. Up until about 12, 18 months ago, DAOs were actually kind of dead as an idea because of sort of what you referenced, which was the original DAO, the DAO. At the time, just to give kind of a quick Coles notes on what happened with the DAO, like you said, it raised $160 million in Ether, which actually represented, I believe, around 14% of all Ether in circulation at the time. A hacker found a vulnerability in these smart contracts that custodied the Ether and essentially drained the funds, which caused a ton of chaos in the Ethereum ecosystem because it held 14% of all Ether, and actually led to a fork of the network into two networks. So Ethereum, what we know today, and then Ethereum Classic, which was sort of the original, I guess. Anyway, so because of this sort of traumatic event early with the very first kind of iteration of DAOs, they sort of died as a concept for a number of years. And then they've really emerged in the last 18 months with the emergence of DeFi. So DeFi protocols, as we know, they facilitate sort of financial systems across a range of different applications. And they typically have a governance token which controls the parameters of the protocol. And a lot of them are increasingly clipping a small fee, and that fee gets directed to a treasury, an on-chain treasury, which is controlled by said governance token. And so that's kind of what's giving value to these governance tokens, is the fact that it has control over both the parameters of the protocol, but also controls this treasury, which is kind of continually increasing. And so because of this, because of kind of all the economic, the massive kind of boom in DeFi and the economics of these DeFi protocols are so attractive, there is a big need for governance of these treasuries. And that's kind of where DAOs have come in over the last 18 months. And essentially what DAOs allow you to do is they allow these pseudo-anonymous decentralized protocols coordinate the allocation of treasury funds. And a lot of these DeFi protocols, the treasuries have massive war chests of their native token in these treasuries. For example, Uniswap has I believe it's a $10 billion treasury, which is controlled by Uni token holders. And rather than the kind of Uni core dev deciding what to do with that treasury, the token holders get to decide through the Uniswap DAO. And it's really interesting because you have these massive kind of, it's a totally new thing where you have pseudo-anonymous actors sort of coordinating on how to better these ecosystems through the use of these war chests. And I mean, I guess that really kind of comes down to my question, because I know you've written a lot about this, is do you think these kind of systems are able to actually manage these treasuries in a way that's actually efficient and kind of competent, given that it's all sort of direct democracy based voting?
It's a great question. As you were talking, I was thinking, how big are these things really? What are these treasuries like? And you pointed out Uniswap as a $10 billion treasury. I don't know if it needs repeating, but that's a very big number. I just looked up Coinbase's balance sheet. So Coinbase being like the big, traditional corporation that does what Uniswap does, and has a $50 billion, market cap, making it bigger than, the New York Stock Exchange. And its total current assets of $14 billion against total current liabilities of about 10. So on total assets, total liabilities, it looks like it has maybe $5 or $6 billion of share equity. So like, let's say most of that's cash and equivalents. So basically, just like this is my back of the envelope, don't quote me on these numbers. Uniswap's got kind of like double the war chest of Coinbase. It's kind of like remarkable when you think about that, that this decentralized exchange could be that big relative to the one that obviously is much more well-known in the traditional world. So yeah, there's a lot of things that I find sort of interesting about DAOs, the idea of, automating decision-making, making it easier for people who have a vested interest in something to have a say in the outcome and in its future. I think that's overall like a very good thing. That's the spirit of democracy and of shareholder rights in general. But there is some sort of paralysis, I think, that occurs from just having so many things that go to votes and just having a lot of token holders who frankly are apathetic or don't really even know that they should be voting on something. And that's a reminder, I think, in many respects of it's not everything about DAOs, I think, needs to be adopted economy-wide. I think there probably is still some room for some management. If you look at like our system of government, for example, we don't have individuals voting on every measure that goes before Parliament. You elect a parliamentarian in Canada or a congressperson in the US to represent your interests and to do what they think is right based on your your feedback. And if they don't act in your interest, then you can vote them out. But they're not asking your opinion on every single vote necessarily, right? So I think that and in a corporation like Tim Cook at Apple is not putting every vote to shareholders every time he needs to make a big decision. It's his job to figure it out. So like there is certain something to be said for management, I think. And I think that it'll be really interesting as DAOs become just much larger as stewards of all this capital in the ecosystem and controlling more and more functionality. These DeFi protocols, they do a lot, they have a lot of customers, they control a lot of assets, they have big treasuries. Like these are like big things. And, it'll be interesting to see just how effective this kind of governance is. Like we talked a little bit on a previous DeFi Decoded about governance and what, you're thinking, how you think about it and whatnot. Maybe just give everyone just a quick refresher on that. But before you, and try to do that, so I think in sort of answering this question, right, which is like, can you have totally decentralized decision-making, or do you really need some kind of authority helping you along the way?
Yeah, it's a great question. It's actually pretty much one of the biggest unsolved problems right now is the governance problem in sort of DeFi and the blockchain space. So I'll kind of give a quick overview of DAO governance. The sort of default is what we've talked about, which is kind of like a direct democracy approach where every token holder gets to kind of vote on every decision. And the first sort of project to implement that was MakerDAO. And the problem was kind of just widespread voter apathy.
Yeah.
And what that means is that essentially voters don't care, like you said, because it's too much for them to sort of think about each of these decisions. And the result is just very little participation. A couple of whales control the entire vote, and sort of kind of defeats the whole purpose. The sort of next generation of DAOs are doing a more kind of representative democracy. So what I mean by that is, and something like Polkadot and the substrate systems, ecosystems are better suited for this. They allow kind of the token holders to vote on specific committees or councils made up of kind of a small select number of individuals who then operate on behalf of the kind of wider token holder base,
Right.
with more kind of direct authority on decisions rather than having to kind of go through using the token holder vote for everything. A project like Index Co-op, for example, which we kind of mentioned last week, also does something like this. And then there are some sort of projects looking into completely new governance systems. So for example, the project that I'm involved in, SX Network, is actually looking to use prediction markets for governance rather than voting. It's this idea called futurarchy, sort of, that's what the academics call it.
Yeah.
And the idea there is, rather than voting with tokens on sort of these different decisions, you actually have betting markets where users bet on what policies they think will achieve certain outcomes. And then essentially based on the market prices of the different policies, that determines which policies are actually enacted. And then as soon as a policy has essentially been approved by the betting markets, bettors are then locked into their positions, and essentially the bettors that went long the policy are paid out if the policy leads to the desired outcome, with the people who are short the policy losing, and vice versa if the policy fails to actually achieve the outcome necessary. So it's kind of using a market-based approach to governance. And then finally, there are a number of teams that are just trying to do away with governance entirely. They're sort of going for a governance minimization. The most notable is this thing called Raya, which is kind of doing MakerDAO's approach to a stablecoin, but with no governance control at all.
Yeah. Well, the idea of futurarchy is certainly interesting. I mean, creating an incentive for people to vote would, I think, work, right? But it also runs the risk of adding another level of complexity to a process. I think what's different is that, it should be easier with the right incentive and with the right user interface to make voting on stuff easy. If you think about a proxy vote in a traditional financial, environment, it is incredibly complex and costly to do this. And, you're lucky to get a certain number of shareholders. Like, you can vote online now, but in general, like, a lot of people are still voting via mail and other sort of antiquated technologies. So I think the idea of, if it was easy as like liking an Instagram photo, like, do you like this proposal or do you not like this proposal? And so I think we're getting there. I think a lot of it's user interface, a lot of it's incentives. I think futurarchy is definitely a really novel concept that could help us to get there for sure. I guess the question that I have as well is, and this goes back to, are these things decentralized? Who's in control? So this is relevant too from a regulations perspective as well, right? Like a governance token, the idea that you have a token that is worth something and confers certain rights to you that allow you to vote on stuff that's relevant to the thing you own, sounds a little bit like share equity in a company, to be honest. The idea that you as a stakeholder in this entity have a right to vote on certain priorities. How do you think regulators think about DAOs?
Yeah, it's a good question. It sort of depends on, a lot of people sort of think about it, it depends on how decentralized the protocol actually is, because the decentralization sort of directly confers what level of trust users need to have. So sort of to back that up, what I mean by that is, if the token is completely in control from a technology perspective on the treasury, meaning that no third-party centralized actors can even sort of change the voting rights of the token, because it's all programmatic, then in a lot of ways, adding kind of a layer of regulation onto it doesn't really make sense, because it also doesn't seem kind of enforceable in any way. You know what I mean? Like, it's kind of thinking about it like, the same way that regulators came out and said Ethereum and Bitcoin shouldn't be considered securities, is because they're at this point, for the most extent, they're fully decentralized.
Yeah.
And the software protocols dictate everything. There's no real ability for a founder or something to try to influence the outcome of anything.
Yeah.
And so I think really regulation in both the DeFi world and the DAO world really comes down to how decentralized these protocols are. If the protocol still relies on sort of the founders to facilitate a number of things, then there may be sort of more room for regulation. Whereas something that's fully decentralized, it doesn't seem like there's a lot of room for regulation because they're, I guess, effectively autonomous. So to me, it really kind of comes down to the decentralization. And I think systems that are kind of blockchains, from what we've seen, seem to be more fully decentralized, whereas DeFi protocols, it's still kind of up in the air whether they are fully decentralized or sort of reliant on these third parties to keep the protocols going.
Yeah.
But to me, it's really kind of a spectrum.
Yeah. Yeah. I think it's one of those things where it's so new, nobody really knows quite how to think about it. But I love that test of decentralization as a good starting point. How does Prophecy DeFi think about DAOs and opportunities in this ecosystem? Is this a place where you see layer 2, which Prophecy owns, you run it, doing a lot of work?
Yeah, I think DAOs are a very interesting sort of avenue for activist like investors or DeFi operators and liquidity miners to definitely kind of get involved in and contribute value beyond just capital.
Yeah.
DAOs are very much kind of community-run organizations. You can kind of think of them as a digital co-op in a way. For a lot of teams, like voter apathy, sort of lack of community involvement are huge kind of obstacles for them to overcome. And so by being a team that is engaged actively in the actual underlying communities that we're a part of, we can kind of add a lot of value beyond just simply capital, which sort of opens you up to a number of other business opportunities and kind of enhanced reputation and a thought leadership sort of position. So it's definitely something that the layer 2 team and Prophecy DeFi team are sort of focused in trying to contribute value to.
Yeah. And I guess it was made public yesterday that Prophecy DeFi has completed the acquisition of layer 2. And in that press release also announced that layer 2 has had a lot of success in the DeFi space. So which shouldn't be surprising, I think, to anybody who listens to this podcast and understands how deep you are in the space, Andrew, but always good to see. That sets us up, I think, for next week's discussion, which we haven't figured out what that will be about, but I'm sure it'll be great, whatever it is. So I think that's it for this week's episode of DeFi Decoded. Thanks for joining me and Andrew, and we will see you next week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.